better than your currency. Splurging millions, buying houses like Monopoly. Fucking 9 to 5, man, the money is a joke to me. Buying cryptocurrency, my money in the privacy.
Hey guys and girls, welcome to this week's episode of the BS With Birchy podcast. I'm your host Nathan Birchy. This is a show unraveling the truth to the start of the 21st century. We're now exiting the matrix and waking up to motherfucking reality, and it's a grim reality for a lot of people out there nowadays who think, I need to buy a property, I can't afford a property, all that sort of stuff. But I feel like I've always wanted to buy a DeLorean, right? And for those of you that don't know what a DeLorean is, I know there's some of you that are like, what the fuck is a DeLorean, right? Might have to go Google it, but if you go and watch the movie Back to the Future, it is a silver car. There's only about 7,000 of them made by John DeLorean and DMC. It's a car, and my reference to that is to go back to the future and pick up shit that's really fucking cheap and take yourself back to the good old times. So with it, unless if you've got a DeLorean and you can drive it at 88 miles an hour, it's pretty hard to go and take yourself back to 2010, 2015, 1980s, whatever, and try and get ahead. And I guess with each generation that's gone by, there's always been some level of challenges that are out there. And challenges, sometimes people sit there and go, oh, Birchy, but it's lucky for you. You did it 20 years ago. You did this, you did that, whatever. You had this. Look, I'll tell you, nothing in my life was fucking easy. There's been adversity at every level, and it's a matter of trying to find that adversity and overcome that. So, getting into it without being too negative, we've got here a news article straight from the freshie from the news, right? And this news article says $182,000 is a minimum income needed to buy a house in Australia. Let me tell you that, right? The average income of 70 grand or whatever it is, everyone would be royally fucked that they couldn't be able to buy anything given that, because it's a different sort of world. So yes, these headlines might make it sound like it's impossible. Yes, all the pressures to go and look at the photos that they use, right? Look at the photos. There's all these houses with no eaves and all got a grey Colorbond monument coloured roof, right? That's not a real house. That's just a trap. That's to keep you enslaved into the system. But anyway, you want to be looking, parallel to that. And today, I want to talk about what some of our investors do, what I've done, right? How can you build a large 10, 20 property portfolio if you need $182,000 to buy a house in Australia? It doesn't say any house, it doesn't say a specific house, it just says a house, right? So you can't get into a house for cheaper than $182,000. Yeah, maybe the journalism there's a bit overcooked as well. But looking at this article, read the article and I'll tell you my thoughts if I was starting out again today. I'll tell you, a bit about what my investors are doing, what I have personally done, and how we can hop in the DeLorean and go back to the future and find you some stuff that's really fucking cool. So this one here, it's just an article that's come out. It says, following today's 0.25% interest rate rise. So this article was out from the Melbourne Cup Day sort of thing, increase. It says Aussies need to be earning a minimum household income of 182 grand a year to buy an average price house. New data from Finder has revealed. To be able to afford an average price unit, the figure drops slightly to $130,000. Let me tell you, right, and I think we should call this podcast How to Buy a Property for $40,000, right? Because I've got people that are on 40 grand and 45 grand a year income. Like, I think the minimum income is $43,000 a year. And I've got people on minimum income buying property, right? And you don't need a 200 grand a year income to buy a fucking property. So just throwing it out there for what's to come in this podcast. But it says here both are well above the full-time average salary, which is at 96 grand according to the ABS. Graham Cook, head of consumer research at Finder, said these figures, which take into account the latest rise in interest rates at 4.35%, meaning that to be comfortably afford a mortgage is beyond reach of many Aussies. People are looking at stretching themselves financially in order to purchase a property. Whilst it's not impossible, there are things to consider when aspiring to own a house. The situation is more dire in some of Australia's biggest cities. The following figures are based on a 6.25% variable loan rate and a 20% deposit. Sydney, the average household income of $261,000 is needed to buy the average price, while an average income of at least $148,000 is to afford an average price unit. The following figures are based on a 6.25% variable home rate and a 20% deposit. Sydney. In Sydney, an average household income of $261,000 is needed to buy the average price house, while an income of at least $148,000 is needed to afford the average price unit. Well, what the fuck is this average price stuff, right? Like all these people go, oh, the average price, right? If you can't afford something, go and do something different. Like when I bought my first property, I didn't want to have to go and buy in Mount Druitt. It wasn't my aspiration in life to go and buy a house in Mount Druitt, but that's what I could afford, so I went and did that, right? And I look at people out there and like, oh, it's all too hard, and suddenly you're from your 20s and you go to your 30s, and your 30s you're in your 40s, and time speeds up against you. And I see so many people, and they've let their life just trickle through their fingers, right? Because they haven't taken action. They just go, oh, it's all too hard. They get caught up in the emotion and the fluff of how bad it is and stuff. And I'm actually seeing a lot of people now that are middle-aged, like it could be 40, could be 50, could be 60, and they haven't even bought a house, and they're coming to me, they're like, my rent has gone up way too expensive. I'm paying $700 a week, and I'm on like $1,200 a week income. I can't afford the rent. I need to buy something. I'm going to move out here. I'm going to move out there. I'm going to make this happen. I'm like, you could have done this 20 years ago, but you didn't, right? And that's the problem. And what are we going to be saying in another 20 years' time? What are we going to say in another 5 years or 10 years' time? The system is rigged, and the system is wrong, and the system is broken, but you don't have to apply by just going in with the system. If you can't afford to buy your dream house, it says here the average house, right? If you can't afford to buy a $1.5 million house in Sydney, it's pretty hard to even find a $1.5 million house nowadays, but let's say you can't afford $1.5 million in Sydney, well, don't fucking buy in Sydney. Buy somewhere else. Go buy a place that you can afford and rent where you want, right? So what I mean by getting into the market, I've got people that are on like 43 grand a year that buy a property for 200 grand. That 200 grand property brings in $350, $400 a week in rent. With that $350, $400 per week rent, that's covering half the rent on the house they're paying anyway, right? Instead of having a $1.5 million mortgage, you only have a 150 grand mortgage, right? So if I was to start off today and I was watching all these headlines of like 182 grand, like it is, I look at them like, oh, that's okay, it's just the numbers, right? Because at the end of the day, they are just all numbers. But it's like, how would I win at the game today if I was starting off again? Well, I bought my dream house that I live in today a year ago, right? And before that, I was living for the last 2 years in a house which was about 100 years old. And before that, I lived in a house for about 10 years, which was my first principal place of residence. And I was like building a big mansion on there. I was like, I don't want to build the mansion, it's a waste, or I don't want to go and buy the mansion already construction. So looking at it, up until that, I either rented, I was living in a shitty old house, I lived in my house where I was living for 10 years, $5 million it's worth today. So it wasn't too shitty, but it wasn't my mansion sort of thing, right? But for me to get to that point, it took a lot of sacrifice. Look, it took a lot of commitment. It took a lot of discipline. It took a lot of research. It took a lot of applying myself with my planning and going, okay, yeah, that's a step I need to take in order to get to the next step on the journey. And it just didn't happen like that. So if I was starting out again today, I wouldn't be buying the house to live in. I think it's absolutely fucking stupid to go and buy a house to live in that's expensive like that. Even half the average houses out there, if someone asked me in Sydney, I'm just using Sydney as an example today, like where to buy in Sydney, there's only a handful of pockets and they're mainly units, and the other handful of pockets are mainly on the other end of the spectrum, which are like $5 million acreages, because I'm looking at them from a subdivision potential. The middle of it, I just don't find anything attractive out there because it's just, the numbers don't stack up. I'd rather go and invest and get a greater return on investment. So if I was starting out again today, and we look at these houses, right, like what's the average house in Australia? It says here in our notes, the average house in Australia, or the average household income in Sydney, for example, we'll use Sydney as an example. Average household income in Sydney is 261 grand. That's not the average, right? That's not the average income. Like I see people in the suburbs, they get like 70 grand, 100 grand, whatever, right? But let's just assume that's right. The average house at like $1.5 million, let's say $1.5 million would buy you a comfortable sort of semi-comfortable house to live in Sydney. It's shit. It's a absolute trap to be in a 30-year mortgage on a $1.5 million debt with a house with no fucking eaves, where everyone's got the same coloured roof and the same coloured facade on it, It's just crazy. It's ludicrous. So I would not be doing that, and that is not what I did to start off with. If we look at Sydney, for example, at the moment, there's only a couple of markets, and there's either at the real cheap end of the market where you find a unit for like 300 grand, rent for 500 a week, that sort of thing. So 300 bucks, 300,000, 350 grand for a unit, which is below rebuild, below market, good growth potential, good migration potential, and having like a 500 buck a week rental income, so it's positive cash flow, 100 bucks with the current interest rates. Or the other end of the spectrum, which would be like buying, an acreage for 5 million bucks where you can chop it up and all that sort of stuff. So there's no middle ground for me in Sydney. I don't see any value there. Average is just average, and I don't want to be an average investor, so I wouldn't buy those average properties. So looking at, if I was starting off again, instead of taking that $1.5 million mortgage around my balls for the next 30 years of my life, I would go and buy 10 properties for 150 grand a piece, and I would outsource those mortgage repayments to a tenant, and I would have the tenant coming in. So if I was on 40 grand a year, let's say 43 grand a year, I would go and buy a property for 150 grand. I'll put down a 30 grand deposit, and I'll get a 120 grand loan. With a $120,000 loan at 6% interest rate, that would be around $7,000 a year, or maybe 150 bucks a week in interest repayments for that. On that 150 grand property, I expect to get about a $300 per week rent, maybe $350 per week rent, which would total to be about 15 grand a year, 16 grand a year, something like that. So a couple of things would occur to my financial position at that point. Firstly, I would have a property that would be neutral to positive cash flow. I would be buying an asset that would be below rebuild costs, because you can't build a 2-bedroom granny flat anywhere now for under 200,000. So looking at buying a property that would be freestanding, it would be an actual property that's built with a cash flow and its own land component. You've got the building component, but you've also, even if it's a block of units, you've still got the unit. Let's say there's 20 units in the block. You've got to buy the block of land and divide it by 20. So there would be the land component. So knowing that I'm buying, the intrinsic value of the property I'll be buying will be very strong. It'll be positive cash flow. But one thing strange that people don't look at here is if you're on $43,000 a year and you buy a property that rents for 350 bucks a week, or say 15, 16, 17 grand a year, your income's no longer 43,000. It's now $60,000 because you've got the rental income. So yes, your debt's gone up by 120 grand. You had no debt beforehand. Now you've got debt of 120 grand, but now you're on $60,000 a year. So when you go back to the bank's like, okay, you're not on 43, you're on 60. Cool. So if that property there goes from 150 grand to 200 grand, you've now got $50,000 worth of equity in it. 80% of that $50,000 worth of equity that you can pull out is $40,000. With that $40,000, you could pull that equity out. Yeah, you'd be paying interest rate on that of say 6% of 40 grand. So 4 6 is 24. So you've got about 2,400 a year, or maybe 60 bucks a week, an extra 50 bucks a week in extra interest repayments you'd be making. But that would enable you to get that deposit out to buy the second property. And you go and repeat the process again. You buy a property for 150 grand, $30,000 deposit, let's say 10 grand for closing costs. You'd get a loan on it for 120 grand. You'd rent it for 350 a week. Let's say you're getting extra 15, 16, 17 grand a year in rental income. Your income's no longer 60 grand a year. Your income's now 75 grand a year. So your income is increasing. Yeah, your debt will be sitting there on the debt side of it, on the liabilities of a ledger, and you'll be owing the bank 120 for the first one, plus some equity out. So you might owe the bank 120 and 40. So you're owing the bank $280,000. But now you've got assets that are worth 350, 400,000. So your net worth position's improving and your cash flow is improving dramatically. So most people are sitting there thinking, I've got to go get a job, got to climb the corporate ladder, go and fucking, impress the bosses. Yes, sir, no, sir, 3 bags full, sir. That isn't a good way to live, and being trapped into a mortgage we have to pay. The most important part is if you don't want your job and you do quit your job or something happens, well, you've still got your tenants getting up every day, going to work, earning their money, paying it to you, then you're taking their money, then you're paying off your mortgage. And what I've seen a lot over the last 2 decades of buying properties is that when you take that money, there's, the first year it might be neutral cash flow, the second year, the third year, the fourth year, you start getting passive cash flow come through there. So if you've got 10 properties now, which are worth 150 grand a piece. So you've bought 1.5 million worth of property. You've now got 10 sets of tenants in there, which are bringing in 10 sets of rental income streams. So, your position has increased significantly. And if you just get $100 out of each one of them, you've got $100 times 10, there's $1,000 a week. There's a passive income stream. You can use that to pay your rent, pay your mortgage, fund your dream home, whatever the case may be. That is exactly the same method that I used over the last 20 years to get to where I am today. I've seen people do it much faster, much more rapid, much more aggressively, much more smarter, much more wiser. At the starting point, I was like, I'm the fucking hero. I'm the guru who discovered this thing that's out there called, the system that I use. But I look at it now and I think, fuck, there's a lot more to learn, and I've got investors out there which have done it a double the time faster than what I have. I've seen people get there much quicker and whatnot. So you sit there and you look at everyone around you and you think, if I take average actions, I'm going to get average results. I'm going to have to buy the average household with the average income. Like, I think they say here the average household income is 261 grand a year. That sounds like a lot of fucking money, and it is. If out of you listening, maybe we should put a poll against this podcast. It would be fun. I don't know if you could, but anyway, let's just say we put a poll. Put a little comment down below in the section, like whether you're higher or lower than that, right? You're not asking people to put what they earn, right? It's not let's not put on the podcast what you earn, but just think about it, right? Go and talk to your friends and family. Go speak to someone who's earning 260 grand a year. It's not every second house has got 260 grand a year. It just says here the average household. But let's assume we earn the average household income. We don't want to be average, right? I know hands down that I've got investors that are on 70 grand a year income, and they've bought 10 properties, and those properties have now pushed their household income well and over that, with earning more from their rental income than what they are from their active income in their job. So I think the whole thing about trying to get ahead, trying to escape the matrix, trying to break the rat race, break the chains of slavery that we've got, all starts with planning and strategy. Most people are planning more for what they're going to do for this next weekend. More people are going to be planning for what they're going to spend their money on Thursday when they get paid. Most people are planning more for their next holiday. And, it was coming up to Christmas season. People are planning more about their fucking Christmas turkey and what they're doing with their staff colleagues at the Christmas party, or, whatever the case may be, than what they're planning their escape from this fucking trap of life and trying to get out of that, because you can just keep sitting in that hamster wheel of life or trying to break out of it. And it's absolutely disgusting, right? That you sit here and see articles saying $180,000, $182,000 is the minimum income needed to buy a house in Australia. I'll tell you a fun fact. The house I was talking to you beforehand about buying that I bought was my house I live in now. It's like a $4 million house. Just say $4 million. I sold off like 5 properties last year and bought that thing almost cash, right? I look back and some of the properties I bought were like 300 grand, owed 200. I sold it for 1.2. I made $1 million cash, put in my bank account. Got some other properties that I bought for 200 grand. They're worth like 600 grand. Sold a couple of them. Buying a house cash, right? Think about it. I think, imagine if someone was to go get a $4 million mortgage, right? What would a $4 million mortgage work out to be? Firstly, the 20% deposit would be $800,000. Let's just say a 5% interest rate. 5% interest rate on $3.2 million would be $160,000 a year. You'd have to earn like 500 grand to be able to just pay the interest repayments on that. How do people get into those sort of properties, right? What's their strategy? What's the secret sauce? There ain't no fucking secret sauce. It's a matter of strategy behind it. I thought if I just save for 80 years of my life, 50 grand a year, how many people can save 50 grand a year, right? You're going to have to be on 250 grand, pay taxes of like 100 grand a day. So with 150, your lifestyle's probably fucking up there. So you're going to be paying, expensive car, expensive this, expensive that. You're going to really be saving 50 grand a year. Let's just assume that you save 50 grand a year. To save $4 million without paying interest or anything on it, it's going to take you 80 fucking years to get there. It's impossible, right? But if you have a good strategy, it's when you're making your tenants pay for your place to live. It's where you're getting your asset that's going up with inflation. It's understanding all the macroeconomics that are surrounding the whole system to be able to create a strategy that's going to work for you. And everybody's position is different. Everybody's starting position is different. My starting position in 2003, when I bought my first property, is a very different position to where it is today. My investors, when they start buying their first property with 50 grand that they've got, until they buy their 15th property and they've got like Like if you're an investor with your first property, buying something with 50 grand, that's great, right? But when you get to 15 properties, right, you've got 15 properties that might have gone up 100 grand each. So you've got 1.5 million worth of equity there, right? It's a different position. But when you get to 1.5 million worth of equity and you've got 15 properties, well then you might be in a position where you can't get the equity out. You might have to sell something. You might have to restructure something. It's what do you need to do to push forward for the next phase in the portfolio? So that's the whole part of the game, is constant growing, reassessment, realigning, and making sure that you are clear on the goals that you're trying to hit and the steps that you need to do in order to make sure you hit those goals. So yeah, I'm going to wrap it up there before I waffle on too much, before I get too fucking passionate and swear even more on this podcast. But 182 grand, bullshit. You can build a portfolio. Most of my investors, here's something to this editor from news.com, and I'm not going to call them out and be rude or mean or whatever, right? Because they're just doing their job writing these articles. But 182 grand is the minimum household it takes to buy the average Aussie house, right? Yeah, there might be some fucking stats, but let's pull out some stats from here at B.Invested, right? Most of my investors come to me with 0 to 1, maybe 2 properties, right? People that come to me with 10 properties, normally they're stuck and they've, caused themselves a bit of grief to get to those 10 properties, and it's rare that I ever see that. But stats from us, we might have one or two properties when someone comes to B.Invested. I would say the average household income, the average personal income would probably be 80 to 120,000 per person, maybe about 180 grand for a couple. And those people start with 1 or 2 properties, if they even have anything. Generally, they start with 50 or 100 grand worth of capital, and within a period of 3 to 5 years have 10 to 20 properties in their portfolio. So whilst we've got the average poor bastard in the country thinking they have to earn 182 grand, our investors, on average, with 180 grand household income, are making 10 to 20 property acquisitions, right, in a period of 3 years to 5 years. It's fucking ludicrous. So if you don't want to be average, you want to get out of that, you want to think of how you can start from your position with 50 grand income, 40 grand income, 20, 30, 40 grand saved up, I'll tell you what you need to do. Give us a buzz, 1300 367 925, or you can email us at admin@binvested.com.au. I'll keep listening to these podcasts and watching us on YouTube. We're here every Thursday. A new podcast gets dropped. Yes, there's been a couple of weeks we haven't had them recently. Got a few little changes happening here, which you will see very shortly with my videos. But yeah, make sure you subscribe. Apple Play, Google Play, Spotify, and YouTube. Thanks for listening. Have a great day. Bye for now.
Like Bilal said, man, we're stuck in the matrix. This my advice, don't care if you take it. The dollar back to die, soon to be hyperinflated. This my 2 cents, don't care if you save it. Joint be decentralized and you will see you've been lied to the whole time, and it's the irony, cause they do the exact opposite. You become a slave to the system, enough your money, all they do is profit. There's no conspiracy theory, you better hear me. Crypto will set you free before the system does. I don't care if you do or you don't, but what I'm saying is the truth to the reason you choke. I never been a failure, excuse my behavior. Keep talking, haters doing me a favor. They all tell lies, I know what they been telling you. I'm the opposite of Donald Trump of Australia. It's amazing, here for the taking, my time is never wasted.